Nearly all of the UK's largest 350 listed companies pay dividends to their shareholders twice a year, but there are 10 of them which actually pay 4 times a year. Who are these companies, and should you invest in them? And how do they compare to a simple UK index tracking ETF? Well, in this video we will try to find out. This is not investment advice and is for entertainment purposes only. I'll introduce the companies in ascending order of total return over the last 5 years. The first company which pays a dividend 4 times a year is Diversified Energy. This company specializes in gas and oil production, operating in the United States. It is listed on both the London and New York stock exchanges and is a constituent of the FTSE 250 index. It has a market cap of just £500 million. The shares have fallen a huge 55% over the last 5 years, and the dividend is currently 8.3%. There has been a huge increase in the dividend payments recently, which seems rather surprising. If you had invested £1,000 in Diversified Energy 5 years ago, it would now be worth a paltry £510 with dividends included. At number 9 is Tritax Eurobox, a property company investing in distribution centres across Europe. With a market cap of just under £500 million, it is a member of the FTSE 250 index. The share price has fallen nearly 40% over the last 5 years. The dividend yield is 7.2%, but dividend payments look fairly stable. Having said this, however, £1,000 invested 5 years ago would now be worth £817 with dividends included. It's not been a very good investment at all. At number 8 is Unilever. This British multinational consumer goods giant sells its products in over 190 countries. It's highly likely that nearly all households in the UK will own some of Unilever's brands. At the time of this video, Unilever is the 4th largest listed company in the UK. The shares have not had a good time, however, down 10.9% over the last 5 years. The dividend is 3.5%. The dividend history does show an upward trend, but £1,000 invested 5 years ago would only show a slight profit of £44. At number 7 is BP. BP is a British multinational oil and gas company and is one of the so-called super majors. With a market cap of £84 billion, it is the 5th largest listed company in the UK. It has operations in over 80 different countries. The shares have fallen nearly 9%, however, but the yield is a respectable 4.6%. Dividend history is a bit patchy, as you would expect in such a volatile sector as oil and gas. £1,000 invested 5 years ago would be worth £1,110 today. At number 6 is British American Tobacco. As the name suggests, BAT sells cigarettes, tobacco and other nicotine products, and is the largest tobacco company in the world based on net sales. It has operations in around 180 countries. It is currently the 11th largest listed company in the UK. The share price has fallen over 18% in the last 5 years, but the dividend is high at nearly 10%. Dividend history is robust, with payments increasing over the long term. If you had spent £1,000 on BAT shares 5 years ago, it would now be worth £1,179 with all those dividends included. At number 5 is another tobacco company, Imperial Brands, which is the world's 4th largest cigarette company based on market share. With a market cap of £16 billion, it is ranked the 34th largest listed company in the UK. The shares are down 13%, but just like British American Tobacco, the yield is high at 8.1%. Dividend history has been a bit flat in recent years after a period of steady growth. £1,000 invested 5 years ago would now be worth £1,226. Now a quick reminder to check out the video description, where I have some special offers on products and investing platforms I use which could save you some money. At number 4 is HSBC, a British universal bank headquartered in London with historical and business links to East Asia. It is the largest bank in Europe based on total assets and is the UK's 3rd largest listed company. The shares are up 6.3% over the last 5 years. The dividend is high at 7.1%, and as you can see here, the dividend has been growing for the last 3 years. £1,000 invested 5 years ago would now be worth £1,260. At number 3 is Shell. Shell is the second largest investor-owned oil and gas company in the world. It has a market cap of £185 billion, making it the second largest listed company in the UK. The shares are up 15.2% over the last 5 years, and the dividend is currently 3.7%. Dividend history shows rising payments over the last 3 years. £1,000 invested 5 years ago would now be worth £1,330 with dividends included. If you are finding this video useful, then please hit the like button as it really helps out the channel. At number 2 is GSK. This British multinational pharmaceutical and biotechnology company has a capitalisation of £74 billion and is the 6th largest listed company in the UK. The shares are up 13.6% and have a yield of 3.3%. Dividend history is fairly stable over the long term, but a couple of years ago it spun off its consumer healthcare business as a separate company. GSK is now a more streamlined and focused business. £1,000 invested 5 years ago would now be worth £1,362. I've held GSK in my own portfolio for well over a decade now. Each month I reveal exactly what I've been buying and selling. Why not subscribe to follow the journey? And the quarterly payer which has performed the best over the last 5 years is Games Workshop. The company is a British manufacturer of miniature war games based in Nottingham. Its best known products are Warhammer and Warhammer 40,000. With a market cap of £3.2 billion, it is a member of the FTSE 250 index. The shares have risen an impressive 125% over the last 5 years, and there is also a dividend of 4.4%. Dividend history shows a dramatic increase recently. Your £1,000 invested 5 years ago would now be worth £2,528. Here is a summary table of the 5-year performance of all the quarterly dividend payers in the FTSE 350 index. If you owned all of these companies 5 years ago, your total return in that time, which takes into account share price growth as well as dividends, would be 23.7%. So would this have beaten a UK index fund? I'll look at this shortly, but first let's see if buying these 10 quarterly payers could provide you with dividends every month of the year. In January, you would receive payouts from GSK and Tritax. February would also see 2 payments, this time from BAT and Games Workshop. In March, a total of 6 companies pay out. In April, it's the turn of HSBC and GSK. In May, it's BAT and Games Workshop again. June is a real bumper month with 7 companies paying out dividends. In July, it's only 1 company, GSK. In August, there is also just 1 company, BAT. And then in September, we have the biggest month of all with 8 of the 10 companies paying out dividends. In October, it's just GSK. November, we have BAT and Games Workshop. And finally, in December, we have 6 companies paying out. So yes, if you bought all of these quarterly payers, you would get dividends every single month of the year. But of course, it's the total return which is the key figure here. How does the performance of this portfolio compare to a FTSE tracking ETF? As I've already shown, this portfolio has a return of 23.7%. Let's first compare it to a FTSE 250 ETF, which is composed of the UK mid-caps. This one has the ticker code MIDD and tracks the performance of the next largest 250 UK companies which are outside the FTSE 100. The price is up 3.8% over the last 5 years, and it has a dividend yield of 3%. £1,000 invested in this ETF 5 years ago would now be worth £1,163, giving us a total return of 16.3%. Not as good as the average of our quarterly payers. Let's now look at a FTSE 100 ETF. This one has the ticker code ISF and is up 12.9% over the last 5 years. It pays a dividend of 3.6%, and £1,000 invested 5 years ago would now be worth £1,325, which is a 32.5% total return on our money. So ignoring the quarterly payers and simply buying a FTSE 100 ETF would have been the better option. If you had invested £1,000 into these various portfolios 5 years ago, here is how much they would be worth today. So how do we go about buying a FTSE 100 index tracking ETF? Well, this is the one I hold in my own portfolio. It's called the BlackRock iShares Core FTSE 100 ETF. and has the ticker code ISF. In effect, you own a piece of every one of the largest 100 companies in the UK, all in one share. Dividends are currently 3.6% spread over 4 payments a year. There is a tiny ongoing charge of 0.07%. So if you want to invest in large UK companies and really can't decide what to buy, then this might be an option to consider. I've been investing for over 15 years, and if you want to check out my complete portfolio, then click this video here. And if you want to find out which is the best investing platform for you, then click this video here.